Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of June the 13th, 2016. Now to get started this week, we're going to begin where we always do with the US dollar index. We have a very volatile week ahead of us. We have the FOMC announcement, whether the Fed is going to raise the rates or not. I think that there's about a 10% chance that the Fed will raise the rates. What's more important about this particular event is the fact that we're going to have a FOMC economic projections after the announcement. So that's really our focus here, is in those projections. Now, we had a very weak non-farm payroll number, which I think a lot of analysts maybe and a lot of traders are putting a little bit too much weight on one report here, guys. I think that the next report and the subsequent reports coming after that are going to be much stronger. So when we look at our key vantage point levels, let's get started here. We can see our main area that we want to look at is this key level right here, the VantagePoint 18-day predicted EMA, which is 94.63. Now, while above that, we're bullish, while below that, technically bearish. You can see that basically the dollar fought its way back up to 94.56 on the close, very close to that key vantage point level. But more importantly, we can see that we have the vantage point neural index, the predicted short-term difference, and our strength indicator right here above the zero line and moving higher. Now, a far more important indicator for me right now is the medium-term predicted difference crossing over the long-term predicted difference. This is telling me that the medium-term and the short-term trend to the downside is weakening, suggesting we are going to have some dollar strength. We've managed to again claw our way back up to 50.9 on the predicted RSI. We're coming out of oversold territory. Then of course we have our trend line support coming in right here at or about the 93.60 area, and this is telling me that in the short to medium term prior to the FOMC, barring any leaked announcement, that the dollar is likely going to move higher. So again, and we've had a good 2-3 day warning that this was about to happen looking at the software. So once again, our key resistance here, 94.63, we're likely to overtake that by midday Monday, probably Tuesday. Then we would extend higher towards the 96. Now, to be very clear here, guys, major event risk this week. We have no way of definitively knowing what the Fed is going to do, what they're going to say about the rates, or what they're going to say about future rates. So the dollar could, by definition, go either way after Wednesday. So be very cautious leading into that. Now, as for the equity markets for next week, if we get some kind of signal here that basically the Fed is backing off interest rate hikes, may not even hike in 2016, the S&P will go through the roof. But I don't think that that's what's going to happen here. I think the Fed is going to raise rates at least once or twice in 2016. We're coming up against a massive yearly resistance area around 2110. You can see we've closed the week out here at 2091, failing yet again, multiple failures up at this level. If we were really going to say the S&P is truly has any long-term legs, we need to get clear of 2130, 2140, break free and clear of that, and actually start pushing towards 2200. I'd say there's about a 30% chance of that happening, and we're likely in the midst of yet another significant failure on the S&P 500 above 2100. Now, when we zoom this in a little bit so everybody can see it, that always helps. And again, we look at our critical levels here on the S&P 500. Very important. Whether you're a Forex trader or a currency trader, commodities trader, you want to know what the S&P 500 is doing, because it affects so many other markets like oil, the dollar, the euro, the yen, all of these things. So right now, our key vantage point level is 2091.68, excuse me. We've closed at 2096, just barely above that key vantage point level. But if we look at our block of indicators here, again, our neural index is down, predicted short, medium, and long-term differences. And again, there's a very similar signal that I just talked about with the dollar index right here, where you can see the medium-term predicted difference crossing over the long-term predicted difference. This type of divergence warns that we likely are getting ready to move lower, not higher. So as the market is moving higher, likely real money is actually setting shorts here based around these forecasts. So our predicted RSI 50.5, we're holding in there, but again, I think that we really need to break free and clear of 2130, 2140, and that is not going to happen, guys, until after the Fed on Wednesday. Okay. The DAX 30 basically following somewhat of a leading indicator here actually for the S&P 500, pushing this lower. In most cases, this should push the euro higher. Okay, now we've got a lot of event risk, not just the FOMC. We've got the Brexit. We've got all these other things going on that's affecting the Eurozone and the UK. So again, the equities are basically reacting to this Brexit. That's what they're doing. And I think oil to some degree will also. We can see oil forming into a very tight wedge formation here. Now that key vantage point level 49.45, we've closed at 49.72, but our indicators here are warning us that we're likely, I will say potentially, once again getting ready to move lower. We see a very similar signal here in this block here with that medium term crossing over the long term predicted difference, failing at this upper trend line at the 52.20 area. So if oil has any chance of breaking higher, we need to break free of 53, get this thing moving. Could be a tall order going into again next week. Now, as we look at our gold for next week, gold will have an effect on a number of different things, obviously. It will have an effect on the US dollar. It will have an effect on the euro, the yen, all of these pairs, and even the British pound to some degree with the Brexit. So right now, our key vantage point level is coming in at basically 1248, excuse me. We'll just bring this up so everybody can see where I'm getting this level. This is the vantage point 18-day predicted EMA. And again, 1248. We've closed at 1273, a bullish close. But again, we've got these swing highs that we've got to deal with. So the next move on gold is absolutely going to be determined not by supply and demand, but what the Fed economic projections are. Not the actual rate hike announcement, guys. I think we pretty much got that one sewn up that we're not going to have that rate hike. But what are we doing going forward? And this is what most traders do. They get basically consumed by what's happening in the moment, where they're not looking at what's going to happen. What I say with my own direct clients, I don't care what's happening right now. I care with what's going to happen. So those Fed projections, they're going to dictate the next move on gold. If they talk no more rate hikes or limited rate hikes over the next couple of years, gold will absolutely go higher. So be careful of this one in this coming week. Now, as we look at our euro currency this week, again, I think it's going to struggle ahead of the Fed. We can see in this, if I tie my block around the current price, pretty strong resistance here, visual resistance at the 114 level. But here we go again with that vantage point indicator, the medium term crossing over the long term predicted difference. This is signaling a move to the downside right here off of this signal. And again, the neural index supporting that, the short-term predicted difference, and the strength indicator also right here. I'll put a little check mark so everybody can see this. Breaking below the zero line. We are failing again at the predicted MACD in the zero line, and our predicted RSI coming in at 48. Okay, so at 48, we're starting to slowly move into bearish territory, but not trending territory. We're going to look for a trending move once we break into this level down here on the predicted RSI, and our predicted MACD crosses the trigger back to the downside. So right now, we've got good trend line support coming in about 111.50. Look for that area to hold, guys, ahead of the Fed. That area will either hold or break after the FOMC. So again, things will not necessarily be so much on supply and demand this coming week, but more on event risk, fundamental based trading. But the technicals are working that price in. So the key vantage point level 112.67. We're closing at 112.50, just slightly below that area here. If we break down our individual crossovers, we can see that our short term is down off of this resistance at about the 114.05 area. But our medium and long term crossovers are not 100% convinced that we're going much lower. I would be more inclined to follow the medium and long term crossovers next week. Now, same as US Swiss franc. Basically, this is a dollar index trade. Much like the dollar index guys here, this is what I say with my own direct clients. If you're trading Forex, more specifically the Euro US and the US Swiss franc, you need to be watching the dollar index guys. 100% correlation. So here is that medium term crossing over the long term predicted difference in basically one of my favorite spots in heavily oversold territory. We can see the exact same signal here from VantagePoint right around this area, basically just last month. And we had a nice rally from 97 all the way up to basically just under parity right to this level right here. So I'm not saying we're going to get that exact same move, but I'm saying that if the Fed helps us along here, then we could very well return back to this parity level where you can see our predicted RSI also in heavily oversold territory. Also suggesting, if nothing else, a corrective bounce back to this key vantage point 18-day EMA, again at 97.58. So watch the 97.58. I think we're going to basically, like a moth to a flame, we have a new trend line formed here at 95. The trend line's coming in about 90, I would say about 95.80 here, guys. So as long as this area holds, we're probably going to go to 97.58 ahead of the FOMC on Wednesday. So keep an eye out for that. Good counter trend long, I think, is reasonable. Pound dollar, here's what I'm going to say about pound dollar for the next 2 weeks. Stay clear of it, guys. This is nothing more than gambling. Trading this thing right now, this is a good call from VantagePoint off the 18-day predicted EMA. But again, the pair, the British pound, is reacting to basically political polls. Is the UK going to leave the European Union? There's no way of predicting this at this time. So at this particular time, I'm going to leave this pair off to the side and say my strong advice is to be very, very cautious or avoid this pair altogether until after June the 23rd. And we find out if the UK is leaving or staying. In most cases, the British pound is strong at this time of year up until the middle of July. So I would be very quietly looking for the long trade after we get past the event risk of the Brexit. Now, again, we are signaling further weakness on this particular pair, but it could turn on a dime and it will have nothing to do with supply and demand. So just be careful of that. Now, when we look at the equities for next week, how they're going to drive the U.S. Japanese pair, this pair is going to be driven by those equity markets. If those equity markets sell off, the dollar yen is going to push lower. Now, if the Fed starts talking, 2 more rate hikes in 2016. We could see the dollar yen bounce. The support level I've got right now is about 105.50. I would anticipate a move down to that area. The key vantage point level, however, very important here this week, 108.36. Short while below this area, long while above. That's the way we play this. This is a critical pivot area. We also have 107.72, the vantage point 8-day predicted moving average, equally as important here. Okay. Now, my concern with this one here is just like the dollar index and on the euro currency and some of the other things that I've shown on the webinar here today, is this particular crossover from VantagePoint. This is warning me that we could be getting ready to turn higher here. So the medium term crossing over the long-term predicted difference. The medium and long-term predicted difference and the short-term predicted difference is how VantagePoint forecasts the strength of the trend. So if we're going to keep going lower, then I would like to see this continuing to move lower. We can see a long-term predicted, medium-term crossing over the long-term predicted difference right here. That led to a massive sell-off from 111 all the way down to 106. Okay, so we've got to be careful. So as the market is moving lower and the VantagePoint indicators indicators are starting to move higher. That kind of divergence we want to show a little bit of respect to here, guys. So I would be watching for a potential long trade here, but be very cautious. So right now I think the market for next week is going to remain trapped until the FOMC, that is, and between the VantagePoint key level at 108.36 and this lower support at 105.50. So we buy the bottom and we sell the top, but we have to see what the Fed's projections are. Now, as we come into our commodity currencies for next week, not a bad long trade here. We're doing this with my own direct clients this past week. Pretty decent trading here. We've got trendline support coming in 126.50. The VantagePoint indicators here, again, you can see that sneaky little thing right there, that medium term crossing over the long term predicted difference right here to the upside, warning that we could potentially be getting ready for a long. We have a fairly heavily oversold condition, actually, that we're coming out of. We're now at 31.7 on the predicted RSI. The predicted MACD is certainly not where I like it, but I would like to see it back up above the zero line. But the VantagePoint strength indicator and predicted short-term difference are giving me that confidence to buy off of this lower trend line. So, but again, being very cautious as we retrace higher to this level, which is the key VantagePoint 18-day EMA. The theory here is short while below 128.96, long while above. So if we're going to fail, this is where we're going to fail, guys. 128.96, this very well could just be a retracement up here to, again, we can see that this level is color-coded right there, 128.96. We connect this with this dark blue line, and that's how we get that pivot area, okay? And you know, I've received a lot of comments and you know, about the being able to market right on the screen, and people are very happy, so they get a clear visual of what I'm, not only while I'm speaking to it, I can also direct you to these very specific levels. So for next week, a slight upward biased on the US CAD. Now, briefly on a fundamental, we had the Canadian unemployment report. In my opinion, it was very mixed. It was slightly positive, but again, nothing great here, guys. Canadian dollar is still very weak. Canadian economy is still very weak. And again, with the new Liberal government in Canada, doesn't bode well at all for the Canadian dollar, given the history of the Liberals in Canada. Now, and their constant overspending. So when we look at the Aussie dollar, again, it's a commodity currency here. Right now, going into next week, we're going to see trendline resistance up here. My focus is going to be around current price. That's how I draw my trend lines in. We can see right now 75, a pretty strong resistance, but pretty strong support with the key VantagePoint level at 73.39. So we can see this level right here. We have buyers that have been coming in down around this area as we broke our triple EMA cross, but our indicators, again, if we look at these areas here, our medium-term crossing over our long-term predicted difference, our short-term predicted difference, our strength indicator already pointing down, and our RSI failing up here, showing that we are officially entering into overbought territory. So combining these, this suggests that the equities are likely to make a move to the, or excuse me, the Aussie dollar against the US dollar is likely to make a move to the downside to start the week. But again, guys, the main driver, the FOMC, what are their economic projections? Now, we know that the RBA is on hold, so that's slightly positive for the Aussie dollar. So if the Fed basically goes on to hold, then the Aussie US is probably going to go screaming higher. So watch the 73.39 area to start the week. Longs carry a very slight bias, but again, my big concern is this signal right here from VantagePoint, the medium term crossing over that long term predicted difference. Basically, it's telling me that the up move here, first of all, is corrective in nature, and number two, it is running out of steam. So that's not to say it can't get a real nice boost from the if the FOMC kills the US dollar. Now, the same thing would apply here for the New Zealand dollar. We can see the New Zealand basically over the last 8 months, 9 months. You can see that we've been steadily climbing higher. But again, it's gone into a pretty heavy sell-off, the New Zealand dollar. When we look at it from here, last year at this time of year, 1 year ago, always good to look at this. You can see where we were 1 year ago. There's a little bar right up there. If I draw this right across here, this is a horrible line that I'm drawing in here, but this bar right here, we had a massive sell-off off the 72 level last year at exactly this same time. You can see that we basically just plummeted from 72 all the way down to 62, 1,000 pip drop. So that seasonality here, guys, be very, very careful of. Okay, so you know, I haven't seen a lot of analysts talking about that, but currencies are very, very repetitive. And again, we can see this if I just draw this in here off of this swing high from 1 year ago. We want to be very careful around the 72 area. Okay, that's how I'm going to leave this. We've broken through this trend line that would technically come in right here, which is a bullish signal, but be careful of a bull trap around that 72 area. Okay, because if we start pushing to 72 aggressively to start the week, but then we don't get what we want from the Federal Reserve, you know, or we do get, it could send this pair considerably higher or considerably lower. But watch that seasonality of that 72. Right now, looking at the VantagePoint indicators, we're getting into overbought. There's no question we're moving towards overbought territory. Now, when I say overbought territory, number of different things I'm going to use to gauge this, guys. I'm going to use the VantagePoint long-term predicted difference right here. And once again, we can see the medium term crossing over the long-term predicted difference to the downside. And I look for the position of the predicted RSI. Again, that's a problem as we move into basically the 90 level on the predicted RSI. So if I take this off just for a second here so everybody can see this, if we slide our main tool over like this, we can see that again we're 75.3. So we do potentially have some more upside on this, but we just need to be very careful here, guys. Very, very careful that looking at these indicators, we know we've got a problem up at the 72. Basically last year 72 capped any rally. We then went down from there, and again we're moving already into heavily overbought territory. So potentially a very good short ready, you know, to start the week, midweek on the New Zealand pair.